Good morning, everyone. A very, very happy Wednesday here. It's 11 a.m. or 11:02, 11:03, 11:05 to many of us. We are a little bit delayed. Technology works just like that. I'm out here today at Coldwell Banker offices in Cyprus because we had some closings this morning. And I wanted to start by thanking you, all of you. Episode 9 in the house today with Dee Carter. I am so happy that she is here. We're going to be talking about some topics that we have gotten so many questions about. And so I wanted to start by addressing some concerns that we got from a lot of our clients. First of all, should they be buying a house right now? What's going on with interest rates? Are we going to see a crash? Are we? So these are all things that are up in the air because what we do is we get a lot of news out there from all sources. But what I want you to know is that we are here as your resource. We are day in, day out in this industry. Real estate market right now has everything to do with local markets and nothing to do with the US in general. What's happening in the Woodlands, Conroe, Houston, it's so different than what's happening in Austin, Dallas, and it's also very different than what's happening in Chicago, LA, New York. So please contact your local experts to get the real tea spill on what's going on. One of the things that I wanted to bring up is that the best time to buy a house was yesterday, but if that wasn't good enough for you, then today is the right time. Are interest rates higher? Dio is going to talk to us about that just briefly, but they are still lower than they have ever been in the past of the US. The last 2 years where we had very low interest rates are not to be a dominator factor. It's not going to be your usual. So if you did buy a house last year, and you got 2.7 interest rate, you get bragging rights for the rest of your life. Are we going to see that again? Very hardly. That means that the economy would be in a really, really bad place. And we are recovering, and hence the higher interest rates. We also see inflation around us. And before I bring Dee Carter in with MidAmerica Mortgage, I want to address something um, that we have been asked a lot is, do we have a sea of foreclosures? No, we don't. This is what you need to remember, and I can get in more depth if you want to schedule a meeting with me and I can show you the data, can show you the facts. But this is what you need to remember, please. Do we have a high demand for homes? What do you think the answer is? Do we have a high demand for homes? As a matter of fact, I'm going to bring my very good friend here into the screen. Dee, how are you today?
I'm good. How are you doing?
I'm good. So, from what you have seen in your neck of the woods, do we have a high demand for homes?
Oh, absolutely. Yes, it is a bidding war for sure. We have people who are qualified for home loans and are really struggling because there's so much competition out there. Everybody is wanting, when something goes on the market or even before it goes on the market, we are seeing that it's sold. So, yes, absolutely.
Absolutely. A lot of our clients refinanced in the last couple of years. So they're having, lower mortgage payments. They're having definitely an increase in salary because wages went up. So all of this, it really changes the picture from where the picture was. I think it's still in everyone's mind. There's this like trauma that everyone has that is 2006, 2008. You guys, it's 2022. Very different scenario. If you want to know more of the facts, we can help you understand. But my advice to you is get the right information, get with your hyper local experts, know what's happening in the local markets because Katy and Woodlands are totally different animals. Downtown Houston, Sugarland, again, same thing. Pearland to Conroe, night and day. So you need to understand what's going on in those markets. Another thing, not only do we have a high demand for homes from the locals here? Because the millennials that for years we were saying they do not want to buy homes, they're actually buying them by the dozen if they can. We also have this high demand from people that are moving from out of state, and we're going to be talking about it today. But because I promised, let's just talk a little bit about the rates today, what's going on with the rates today, and do you have any word of advice?
Sure. So you are exactly right. We have seen an increase in rates, and just in the past 2 days, we've seen an interest rate incline. So I do want to start out by saying, the rates that I'm going to talk about today, they may vary. These are based on a conventional borrower with excellent credit. There's so many factors that can play into a rate. But when we're looking at an average for a conventional 30-year fixed rate mortgage, and just to give you guys some terms of what we're seeing in regards to the shift. So 30-year fixed rate mortgage right now is right at 4.375. So just 2 days ago, the average was 4.250. So that's an increase, right? And so 20-year fixed rate mortgages are at 4.375 on the average, up from just a few days ago, again, 4.125. And then your 15, so your best rates right now, and I'll talk a little bit more about this after I finish going through these terms, but your 15-year fixed rate mortgage is at a 3.750. Again, that one's up from just 2 days ago, and 10-year fixed rate is at a 3.50. So what all this means is, you can see that the 20 and 30-year terms, they've risen significantly, with each term really sitting well over 4%. So when we're looking at how do we find the best rates available, buyers or borrowers really should consider those 10 and 15-year fixed rate mortgages. I know it's going to bring a higher monthly payment, but if they can opt for a 15 or 10-year mortgage, they really stand to realize significant interest savings over the life of the loan.
Absolutely. So I want to interject right here because Dee, you and I can talk about this all day long. We have so much to teach everybody that is listening to us, but we really need to. I want to share some other information. But on that, first of all, we are really educating people on the 15-year mortgage, and the reason being is you get less interest rate. What you really do when you have a 30-year mortgage, you never have a house and pay it in 30 years. You always end up paying it earlier. That's happening to me. I always pay extra a year that goes towards principal so I can knock out 7 to 10 years out
Yeah.
of my loan. A lot of people are doing that because they want to build that equity. So why not consider the 15-year mortgage? That monthly payment is not going to be that much different. So this is really important. If you are thinking, oh my gosh, the interest rates for 30 years are close to 5%. One, consider 15-year mortgage. Two, let's talk facts. 15 years ago, Dee, I don't know, I don't think you were in the industry then or you were in some capacity, but 15 years ago, do you even remember what the rates were?
Rates were right at 16% interest.
There you go.
Yeah.
So when people are like, interest rates are high, I will tell them it's still very much show a buyer's market. So put these things in perspective, get the right facts, understand your local market in order to make the right decision. And I'm going to throw something out there that I've been saying to people in the last couple of years is that because of everything we are seeing, including society, where we are headed in society, more and more we have a lot of tech people. We have a lot of people that are doing blue collar jobs. We don't, and we all know that we don't have a lot of manufacturing in the US. It has been an issue actually in the past few years. We realized that we actually import a lot of things. Think about construction. Who is building houses? Who will be build houses? We will be building houses in the future. So where will we be in 10, 8 years as far as housing goes, as far as supply? Because the demand is there. Everyone wants houses. Every day I have single families and investors by the ton They want property, they want property, they want property. Houston has a lot to offer. We are in a wonderful city. It's a mega city that has mega neighborhoods, mega suburbs. And so we are here today to talk about, what do you need to know? What do you need to do when you are moving to Texas from a different state? So the floor is yours. Tell us, from a lending perspective, what do people need to know about this?
So I'm glad you brought that up because we are seeing a huge influx in people moving to Texas. And why would they not want to, right? Owning a piece of Texas is really an awesome thing. But before you do that, there's obviously a lot of things that you want to consider before you make that journey. So when we're talking about lending practices, they're really very, very similar nationwide. But I would encourage everyone to find a mortgage professional in Texas because they're going to be more familiar with handling transactions in the state and more familiar with our real estate contracts in Texas. So initial items are going to be pretty standard. What we'll talk about that's maybe a little different is when you're looking at if you're moving to this state and you have a job. When you're moving into the state and you have a job in Texas, or if you're moving to the state and you're keeping your job in the state that you're coming from. So we'll talk a little bit about that, but just to go through some of the items that would be needed, and it's going to be standard. Obviously a government issued photo ID, your last 2 months of current pay stubs, the W-2s and income tax returns, copies of your checking and savings account statement. There's quite a long list of things that we will need, and it's very standard. But when we look at jobs, so we had a lot of people during COVID that went to work remotely. And, companies realized that, hey, we can keep this going. So there's a lot of people that have now decided, I don't have to live in this state where I work. I can move to Texas, for example, and continue to work. And let's give an example of California. What a lender would need, what we would need to be able to qualify you for that mortgage is we would actually do a verification of employment with your current employer to make sure or to verify that you can work remotely. And it's really that simple. So it's just a verification of employment that you're working remotely from that state. Otherwise, if you're moving to Texas, then what we'll need is employment information for your job position that you're going to be taking in Texas. Any addresses and employment history obviously is always important. We want to look at 2 years, but that's really the key for purchasing a home in the Texas area versus, and that's really everything else is going to be your standard type of information that you will typically see on any type of a mortgage loan.
Really good information there. We get those inquiries every day now. What do I need to do? Recently, Wisconsin, New Jersey, California for sure, but also Florida are the main people I've been getting that want to move here. People that wanted to live in Florida, didn't realize how much everything went up. They are being beat out of the market and realize how much more they can get for their money here in Texas. So now they're moving from Florida here. So one of the things that I wanted to ask you, because I have a few situations like that right now, is we have people that own property in their state of residence right now. They own property there, they are selling it. They want to move here to start looking for a job. So they're going to be on temporary accommodations. By the way, ask me how we can get that for you. Temporary accommodations. So we're not doing 12 months lease, we're doing much less. So basically about 60 to 90 days so we can get you sorted out with a job and everything else. So how would that reflect now on a loan, Dee?
Employment, when we're looking at mortgages, we want to, when we're looking at employment, we're looking at history, but also we're looking forward to see that job needs to have. I always say this to people. I realize that any of us could lose our jobs tomorrow, which is always unfortunate. But when we're looking at a mortgage, we look at your current employment and that you have been stable in that position whether it be with that company or another company similar in a similar type of work field for at least the past 2 years. It needs to show that you have the potential for continuation for 3 years past. So employment is very important when you're moving from state to state, or either, from, if you're, even if you're in the state and you're looking for a mortgage, that history of employment and future employment is very important. So if someone is actually moving here and they're not employed, they would need to have, we can actually do a mortgage with an offer letter. So once they find that position and they receive an offer letter from their employer, we can start the loan process just simply using that offer letter.
That's really good information there. Let's bring something up. I'm going to throw you a curveball. I don't think I mentioned to you I was going to ask you this, but you know how I am. I roll with the punches. And I know you are very well prepared for this. So we also have a lot of people that move abroad from abroad, and I've sent you a few cases recently, and some may or may not have credit scores, or they are, starting to build it. What can we do to help those clients? What options are there for them?
So you are correct. Credit is a big thing that we have to have when we're looking at a mortgage. And so for somebody who is moving to the U.S. for the first time and they do not have established credit, my first recommendation would be to go and open up a bank account with somebody like a Chase or a Bank of America, a larger bank. Apply for a credit card with them. You want to start establishing credit. One of the things that you need to make certain of is that the bank that you're dealing with also is going to report to the credit bureaus monthly so that you can start to build that credit. Anything that you can initially, it's not ever recommended to go out and just buy a bunch of things on credit. But for establish credit, a credit card is a great thing. You may want to purchase a vehicle if that's applicable to you. Um, Obviously, you want to purchase that vehicle on credit. When we're talking about credit card usage, you want to be careful of utilization of that card. So let's, for example, if you had a card that was had a $3,000 credit limit, the way that you establish credit is by using that card, but using it responsibly. And how they look at that is utilization. And you want to keep that utilization under 50% and pay it off, if not pay off the full balance, but pay off the majority of that card each month. But you can continue to use that card monthly, and that will increase your score as long as you make those payments on time and do not use excessive utilization on the card.
Absolutely. So, you guys, I'm going to share firsthand experience here. So, I moved here 10 years ago and I did not have a credit as well. I had to build it. So, a few things that work for me. I cannot speak for other banks because I don't bank with them, but I can tell you that with Capital One, I love them for the simple reason that I was indeed able to get a card, a credit card, for a certain value, very low value actually, and I would use it for all my payments, and then I would pay it in full. So one of the things that helps is paying it in full, paying a little bit over than what your minimum is, and paying it always on time is the key. If you don't pay your electricity bill or your water bill, that's going to reflect on your credit, and people don't realize that. And actually, those, they hurt your credit bad. They hurt you, and they're so simple. No one ever thinks, oh my gosh, I forgot to pay this. I know this because I changed credit cards and I forgot to update in the system. And the bill did not go through. I had to call them and change it. And it went, same day in that same moment. But for that moment, it hurts your credit. It really does. It takes tremendous points out of it. So paying it on time, paying over, things that are very, very, very important for your credit. Now, Another thing I like about Capital One, on their app, it tells you what your credit score is and also tells you about your credit score utilization. So a lot of people that we have been working with, Dee, because I'm going to talk about it from the lease to buy program that we have, is that we are really strongly educating everyone we come in contact with, all of our clients, especially people that are renting and want to buy in the future, how to check your credit, how to monitor your credit, which apps are out of there that you can check, how can you monitor this, how can you improve your credit. So that's something we've been very invested in doing. So for those of you that are thinking to move to Texas from out of state and you don't have a job, or you have been changing jobs recently and you may not be in a position to apply for a mortgage, we will help you with a lease. But once you get in a lease with us, we become your best friends. Dee and I are going to be in touch with you the whole time. We are going to have meetings with you. We are going to hold your hand to help you get that credit up and get the information of what you need to do to get qualified. And that brings me to my next question for Dee, that is to look for the best programs out there to help you. Because we know that when you buy the house for the first time, it may be a little bit rocky, but you need to give that first step in order to build your wealth, your equity. It's not going to be the house of your dreams. First time home buyers out there, if you join the house, welcome, welcome, welcome. Let me tell you something. Your first house is not your forever home. It's the first step on building equity. You buy that home, build equity, you get that equity. There's so many. What can you do? I'm talking all by myself because I'm so excited about this. But tell the public, when you have a home, what are the things you can do with that equity?
Oh, wow. Yeah. So, I mean, you can definitely, once you build enough equity in your home, you can take cash out and do remodeling of the home. You can use it to invest in another property. You can use it to, when you do, you can do things like a cash out refinance. And with that cash, you can do whatever you want with that cash. That is your money. There's home equity lines of credit that you can take. There's all sorts of things. So yes, you are never going to lose when you purchase a house. It's always going to be, that's how you're building wealth over time, for sure.
Absolutely. And that's exactly where we are invested with our buyers. So if you rent with us, we're going to be with you until you buy. And when you buy, you're going to be with you until you sell and buy again, or just keep and buy and buy and buy. Why? Again, let's go back to the initial of this conversation. We don't know where we're going to be as far as supply in 10, 15 years. So do it like everybody else. The investors, why do you think investors are buying by the thousands? They're not buying by the dozen. That should be you and I. They're buying by the thousands. They're buying thousands of homes in Houston. If you are in the market to rent, you know that they no longer come from a landlord. There are companies out there, right? That you now even need to pay them to go look at homes. Before it was free. So become like them, become that landlord, build that wealth, pay for your kids' college. Can you count really on Social Security in 20, 30 years? I don't know. I don't know. Retirement is going to be a tricky word for some of us. So there is one way you can create that wealth. Dee just said it. Real estate, buy a home, build equity. What is equity in a home? What is equity? Is all that money you already put into the home? Is all those monthly payments you already made into that home plus the appreciation? So if you bought a home 10 years ago, we all know that homes appreciated anywhere between 50 to 100,000 in some cases in the last 10 years, depending where you are. Again, hypermarket, get that local expert. So here at Casa de Claudia with guest today, Dee Carter, expert loan officer, we try to help our clients by finding loan products that can help them. We don't give up on you. So don't give up on us. Like when you come to us, we don't give up on you. If you put the work, we have some clients that are listening to us today. Mariana Flores, I want to send you a virtual hug right here and now. So a lot of our clients put so much work into what they are doing. We're not going to give up on them, get them to where they need to be to buy a home. So there is a program out there that Dee wants to share some stuff with you. What is that, Dee?
So that is the USDA home loan program. And USDA is a great program because for so many reasons, but mainly, people like it because it has a 0% down payment requirement. And truly, the only other loan available that has a 0% down payment requirement would be a VA. And obviously, if you did not serve in the military, you would not qualify for that type of loan. So a USDA home loan program is great. It can be used for building, purchasing, and refinancing if you already have a home in that area. So a single family home. There are some restrictions on USDA that I'd like to tell people about because I don't want everybody to think that any home will qualify. The property must be in an eligible rural area, so it has to meet the rural development property requirements. So how do you know if it meets those requirements? You contact a lender, and a lender would be able to tell you. We can look up the address of that location and tell you immediately if that home would qualify for a USDA type of a loan. There are some income restrictions on these types of loans, so we really take this on a case by case basis. So the program actually factors the amount of people in the home when we're looking at the maximum and minimum annual income requirements. It can vary if you have one borrower, or let's say you have a person in Montgomery County that's purchasing a home in a rural area that let's say it's an individual that's a 35-year-old that is also moving their elderly parent in that's 65. So that adjusted gross income may change from someone who is just a single person. And if they have 4 children in the household, then that would actually increase their adjusted maximum income limits. So without going into way too much detail in this conversation, I just really want people to know that there are some income limits restrictions on these types of loans. So we do take those on a case by case basis. But just following up and checking with your lender to find out, do I qualify for this type of a home loan program, would be my suggestion for your first step. Monthly debt obligations on these types of loans are 41% debt to income. Again, that's something that your lender can help you with. And we want to analyze credit reports. There are things that on the credit report, the applicant cannot be delinquent on any types of federal debts. They can't have any outstanding tax liens, or without any type of satisfactory agreement paying those back. Foreclosures, charge-offs, bankruptcies, or short sales in the last 3 years, and no outstanding judgments. So there are some restrictions, quite a few restrictions on this type of a loan. So those are things that your lender is going to be able to help you with and navigate through that to see if you can qualify. So those are really
Absolutely.
the main points that I wanted to main topics that I wanted to point out on the USDA loan.
Thank you for that very useful information. The one thing you really needs to register with you today is that USDA loans are 0% down. What would you be paying? Closing costs that are 1 to 2%, depending even with who are we buying and if it's new construction. That Dee, by the way, does a lot of new construction loans as well. um, there's things we can do if we're going on a resale. Sellers sometimes are contributing, depending on the home, with closing cost assistance. Say that we have repairs, they don't want to do repairs, they want to give you some money, we can do that as a seller contribution towards closing costs. So now that seller contribution cost is even reduced again, you need to pay for your survey, and you need to pay for, well, sorry, for your inspection. And then appraisal. Dee and I have a special something for all of our clients, so ask us, what can we do for you? We do have a little something for all of our clients when it comes to appraisal, but again, it's case by case. So Dee really needs to sit down with you and your family, or whatever situation you have going on, and address that case by cases. So that's another question that I get a lot is, I'm in downtown Houston. Does the USDA loan apply? No. A USDA loan is pretty much for less populated areas, less dense populated areas. Usually they're going to be what we call the countryside, right? USDA, right? Um, so pretty much right now I can tell you where a lot of the USDA loans take effect are going to be a lot of the areas in Montgomery, Conroe, Huntsville, Madisonville, Crosby. So all of these areas so far that I cover a lot, I know for certain I can find you USDA homes over there, and you can do it on resale and new construction as well, and the taxes are very low, so ask us about it. Dee, before we
Yes.
go, is there anything else that you would like to share? Anything about your company, about your services, or anything you guys have coming up?
So yes, please, that'd be great. So just to let you know more about MidAmerica Mortgage, we are a mortgage bank, and we process all of our loans in house. So our process and service all of our loans in house. We have our own underwriting team, which is really an advantage over a lot of other companies. To where when we are working with our clients, we are. I mean, from the first visit, we can ask the experts, go to underwriting, making sure that we're not going to run into any problems down the road. We want to make sure that we are your lenders for life. That we just want to build those relationships with our clients. That they know that they can come to us with any questions. We can help anybody within their families. That's the type of family atmosphere that we promote and have around in Mid America, especially in this office that I work out of in Magnolia, Texas. As far as programs that we do have exclusive programs that are just things that we offer at Mid America, and that would be down payment assistance programs for our clients that can qualify, which can really significantly help with some of those closing costs and the initial down payment requirement if you, for some reason, didn't qualify for that USDA home loan. We can offer down payment assistance to help offset some of those costs to help you get into that home.
Absolutely. And now let me give you guys a testimonial about Dee. And no, she has not paid me to say any of this. I really just like to let people know that the reasons I like to work with Dee Carter, Mid America Mortgage, are a few. I have a lot of clients from all over the US, a lot of clients from all over the world. Different cultures expect different things. This is a very fast paced world. We are used to now doing everything virtually, but some of us still like to meet face to face. Some of us like to sit down and have a powwow about our finances because this is a huge investment. One of the things I like to tell my clients is that with Dee, you actually get a team feeling. Like she's there at the closing table. She can meet with you before then. She can meet with you before the loan, explain everything. She's going to always answer her phone, reply to her emails, and she knows who you are. You're not just a number to her. In a sea of applicants, like big companies, big mortgage companies out there that basically don't even know your kids' names, but Dee probably does because she gets to talk to you, she gets to meet your family, and know the dynamics, and that is very important. And just to wrap it up, something that Dee said in the beginning of this call: if you are moving to Texas and you have very good relationships with your lenders where you are, that's fantastic. We love that you have good relationships with anyone you work. But the thing is, we are different and we like it in Texas. We really like being different around here. And it's a really big state and we do things differently here. That's why everyone is moving. It's not a bad thing. That's why people are coming here. We have more space. That means we buy more land. That means we have houses with a lot of land, and sometimes that's hard to conceive if you come from New Jersey, even Colorado. You can actually work with a lender over there that does not know what that means to us. So working with a local lender that knows the geography, the dynamic, the culture of Texas is very, very important. So please, when your realtor is telling you, work with my lender over here, don't distrust. We have your best interest at heart. If you don't buy a house, we don't get paid. That's it. So we are doing everything we can for you to buy that home. and to have a very good and smooth transaction, and have that lender at the closing table, because it's so nice for the lender to explain to you or to reiterate what was already explained to you, and hold your hand and maybe give you a gift. You never know. So,
Well, let me add to that,
yeah.
and also, having the ability to contact that person, and that person, especially in our situation, our company, most of our loans we service in house. So having that ability to have that contact, I mean, things change. Your insurance may change. You may have a question regarding where you need to mail in a payment, or whatever the case may be. Having somebody, a resource for you to contact, or maybe you just have a question about, hey, Dee, can you help me with the amount of equity that I've built in my home? Just all of those things. So having that relationship and trusting your lender is very, very important. And, that's something that, I do. I love to have those types of relationships, those lifelong relationships, because, if I can help a person, the first time is great. But if they come back and, they're buying an investment property or even a second home for their family, it's just a great feeling to be able to work with them again, and be a part of that. So, yes, what Claudia is saying in regards to having that local person that you can trust and work with, is extremely important.
Absolutely. Thank you so much, everyone, for joining us today for another episode of Ask the Experts. Today, Dee Carter, expert loan officer here in Houston, Texas, actually Magnolia, Texas, but everywhere, really. Thank you, Dee, for joining us today. Thank you, MidAmerica Mortgage, for all your support with our clients. And I hope to see you soon.
Thank you for having me, Claudia.
Absolutely. Everyone, I'll be here next week, and I'll let you know later on who our guest is. So stay tuned. Bye for now.
Bye.
Bye.